Intel. For decades, that name was basically synonymous with tech dominance. But lately the story's been, well, it's been a story of crisis. Today, we're going to break down one of the boldest, most audacious turnaround attempts in corporate history. Okay, let's just dive right in. It's really the question that's been hanging over the entire semiconductor industry for the last few years. How does a company that literally defined the modern computer fall so far, so fast? Well, as it almost always does, the answer starts with the numbers. And these numbers, wow, they tell a stark story. You look at the top line, the revenue, right? It peaked back in 2021 at $79 billion, and then just completely falls off a cliff. But the real damage, the truly scary part, is further down. Net income goes from a nearly $20 billion profit in 21 to a staggering $18.8 billion loss by 2024. Think about that. That's a nearly $40 billion swing in just 3 years. It's just incredible. So, to really get why the comeback is so important, we first have to dissect the collapse. Let's take a closer look at the key moments in this financial freefall. This right here, this is the high watermark. Back in 2021, Intel was an unbelievably profitable company. They were generating almost $20 billion in pure profit. This was the engine that funded everything. It was the empire at its absolute peak, right before the crisis really hit.
And this is rock bottom, a loss of nearly $19 billion. Now, let's be super clear. This isn't just a bad year. This represents a complete, fundamental breakdown of their entire business model. The company was literally bleeding money at a rate that's hard to even comprehend.
For me, this is the most alarming number up here. Free cash flow. That's the cash a company has left over after it pays for all of its operations and all of its investments. A negative number this big means Intel was burning through almost $16 billion a year just to keep the lights on and try to fund this turnaround. That is it's completely unsustainable.
But look, these numbers, they were just a symptom. The real disease was technological. For years, Intel had been falling behind competitors like Taiwan's TSMC in the race to build smaller, faster, and more efficient chips. And that tech gap, it allowed rivals like AMD to swoop in with superior products, forcing Intel into a price war it just couldn't win.
So, facing a crisis that could have ended the company, Intel's leadership came up with a plan. A plan so aggressive, so incredibly capital-intensive that you can only describe it as a massive, high-stakes gamble to reclaim its throne.
They call it IDM 2.0, and really, it's a two-pronged attack. First, they have to fix their own technology with a hyper-accelerated roadmap. And second, they're going to open up their factories and become a foundry, building chips for other companies, which means they'll be competing head-to-head with the very rival that took their crown, TSMC.
Now, the heart of this whole plan is a roadmap they call 5 nodes in 4 years. In chip making, a node is basically a new generation of manufacturing tech, and smaller is always better. What Intel's trying to do here is deliver 5 of these new generations in just 4 years. They're trying to compress what would normally take a decade into a brutal all-out sprint. The goal? To completely leapfrog the competition by 2025.
And the entire race, everything comes down to the finish line. A node called Intel 18A. Its success is totally non-negotiable because it combines 2 brand new industry-first technologies at the exact same time. Ribbon FET, which is a new 3D transistor design, and PowerVIA, a totally new way of delivering power from underneath the chip. Getting both of those right, that is the key to the entire kingdom. Okay, so a plan this ambitious carries a ton of technical risk. But then came this huge vote of confidence. Microsoft CEO Satya Nadella just comes out and announces they would be using the 18A process for one of their future chips. Getting one of the most sophisticated chip buyers on the planet to sign on, that was a massive third-party endorsement that suddenly made this whole crazy plan feel very real.
But even with a solid plan, Intel was still burning through cash. The financial risk was enormous. And that's when this story took a really dramatic turn, as some of the most powerful forces in the world decided to step in.
This fight, this whole thing required over $100 billion in investment, all at a time when the company was losing money hand over fist. The risk of failure was just immense. But as it turns out, Intel was no longer on its own. First up, the U.S. government. Through the CHIPS Act, which is designed to bring chip manufacturing back to America, it provided nearly $9 billion. But here's the key. This wasn't just a grant. The U.S. government actually became a major shareholder. This officially made Intel's success a matter of national security.
And if that wasn't stunning enough, a second ally emerged. Nvidia, the undisputed king of the AI revolution, announced a $5 billion investment and a deep strategic partnership. This was just a profound vote of confidence from the single most important company in tech today.
And this partnership, it gives Intel something it desperately needed, a credible on-ramp to the whole AI boom. In the data center, Intel is now going to build custom CPUs for Nvidia's AI systems, directly targeting AMD's big growth engine. And for the PC market, they're going to integrate Nvidia's best-in-class GPU tech right into their own chips. This alliance effectively arms Intel to fight back in what is, without a doubt, the most important market of the next decade.
So the plan's in place, and these powerful allies have provided a backstop. But that doesn't mean the fight is over, not by a long shot. The biggest challenges, honestly, still lie ahead.
There are three huge risks that remain. First and foremost, execution. The 5 nodes in 4 years plan leaves absolutely zero room for error. Any delay would be a catastrophe. Second, the competition isn't just standing still, right? TSMC and AMD continue to execute brilliantly. And third, this new foundry business, it's going to lose money for years. Intel itself says it won't be profitable until close to 2030.
And all of this brings us to the final, critical question for anyone looking at this story. With all the risks and all the potential, is Intel a historic bargain, or is it a classic value trap?
This slide right here puts that valuation question into sharp focus. We're using a metric called price to sales. It shows that for every single dollar of sales Nvidia generates, the market values it at over $26. For Intel, just $2.50. That is an enormous gap, and it reflects some deep, deep pessimism about Intel's future.
And when you look across the whole peer group, it's the same story. On pretty much every valuation metric you can find, Intel trades at a massive discount to AMD, to Nvidia, and to TSMC. The market is basically pricing this company as if the turnaround is going to fail. The big question is the market wrong? So let's just summarize the whole turnaround thesis here. The stock is priced for continued failure, but the company's ambitious plan has now been significantly de-risked by massive financial and strategic backing. This has given Intel a new, credible path into the AI boom. And when you combine all of that, you get what investors call an asymmetric profile. The downside seems like it's already priced in, while the upside, if this plan actually succeeds, could be substantial. In the end, it really all comes down to this one thing. The company has a clear roadmap, it has a fortified balance sheet, and it has two of the most powerful partners you could possibly imagine. But the competition is relentless, and the race to define the future of computing is tougher than it has ever been. So the only question left is, can they actually execute?